My name is Jonathan Groves. I'm a Development Manager with ACE Risk Management International. ACE Risk Management International is a new group that's recently been established by ACE to focus on the needs of multinational corporations which either operate captives or are taking significant or large retentions. ACE Risk Management International really does focus on the needs of multinational corporations from a fronting perspective. One of the key things about ACE is the fact that we have a strong emphasis on our ability to deliver a cohesive, consistent local service, which we feel is absolutely essential when you're trying to manage and operate globally fronted insurance programs. It's not really possible to do what we're doing unless you are a global player, and at the same time you're a well-established, well-respected global player. It's very important that the ACE message and the ACE way of doing business is consistent across the globe, so that the multinational corporation really does very much see that one ACE approach. It's very important that you have a good financial rating, but that's not all it's about, because financial ratings aren't purely a measure of financial strength themselves. They're also a measure of the way you do business and how efficient you are. So although it's a financial thing, it's also really an efficiency thing and the way you actually physically operate as a company, which are vitally important to the rating, and why correspondingly the rating is vitally important to corporations as well. What had been said to us really was that we needed somebody that could take a new look at the way things were done, that could improve the way money is moved around the world, could improve the way policies are issued, and could improve the way that we actually look at the fronting service offering. We're not just a case of, this is the box, do you like the box? We're much more, our boxes come in all different shapes and sizes, and if it's not really a box that you're after, but it's a triangle, then we'll give you the triangle. The captive market over the last few years has changed quite a lot. Basically, it's blossomed in terms of straight numbers. It's grown significantly both in terms of the way they're actually physically used, the lines of business they use to write, the volume of premium which they're taking in, but equally the role that they play within a global corporation. Our service level and our service operations are excellent, are renowned in the marketplace for their quality and for their flexibility. And therefore we felt that first off, we can bring that to the overall fronting service and give us a clear advantage over other competitors which are out there. ACE is financially strong. It has excellent security ratings, has a strong financial position, and it's a stable company. We provide a superior market-leading service in terms of the way we issue policies, we move cash, and we handle claims. These are vital to the multinational corporation. We are flexible in the way we do business. We don't just offer one product or one service. We very much focus on the needs of the corporation and how we can bring our own strengths to match up with their objectives. Our financial position is class leading. We are a stable, strong corporation with an excellent lineage, and this comes to bear and provides the security which insurance buyers require on a global basis.
My name is Matthew Latham and I'm an Assistant Vice President based in London working for ACE Financial Solutions International. ACE Financial Solutions International is the team within ACE that provides non-traditional reinsurance, insurance and risk financing. We at ACE FSI are very excited about the new establishment of ACE Risk Management International. They've been set up to help businesses retain a greater amount of risk, and the type of products we offer allow the clients to do that. So we're going to be working very closely together in the future. We bring with us a wealth of expertise. We've been underwriting these type of solutions now for 10 years. We have a very wide-ranging team which has legal, accounting, actuarial and claims specialists, which are all important aspects in pulling these contracts together. We have our own designated capital. This is a very important point because it allows us to make independent underwriting decisions and allows us to respond very quickly to the clients and the brokers. There's clear alignment of interest between the insurer and the client, and we see it as a win-win situation when these transactions are structured properly. Our colleagues in the USA recently carried out a survey with the major companies over there, and they found that over 60% of the respondents advised that they were going to actually take more risk in the forthcoming 12 months. Now, of those 60%, half of them actually indicated the type of products that we offer as the way that they were going to go about retaining that risk. And this is a very encouraging sign for us. And we're seeing very similar characteristics in the European market at the moment too. The financial benefits, if they have a good loss experience, then they're going to save money on their premium. They've got some guaranteed capacity over a long-term period, maybe 3, 4, 5 years, because we offer multi-year contracts. But yet they've still got the flexibility in the event that they want to cancel after a year, they can do so. In recent times we've seen a couple of challenges facing the ART market. One of those has been an educational issue. Unfortunately, there's been a number of high-profile corporate failures, which have included, in some cases, misuse of insurance or reinsurance contracts. And these are obviously widely reported, and a lot of our clients will have concerns about sort of entering into an ART contract. One thing that's very important to stress is that we always provide ART contracts for insurance purposes only. We're not seeking to do any earnings manipulation or balance sheet smoothing, and the benefits that the client gets are not of that nature. Recently there's been a number of changes or proposed changes coming in the accounting and regulatory environment, and these are going to tighten up on some of the benefits that could be achieved through an ART contract. We see a very positive future for the ART market. There's going to be a lot of changes coming in with accounting and regulatory issues, but we've been around now for 10 years and we've met a number of challenges already, and the market is a very innovative market, and I'm sure it will rise to meet those challenges of the future.